Okay, so anyone interested in Ping An, that Chinese financial services giant,
Mm.
we took a deep dive into their 2023 annual report, and
Yeah.
wow, it's not your typical dry financial report. We're talking everything from business segments and growth strategies to key financials and how they create value for shareholders, the whole nine yards.
Yeah, it's really interesting. They're not just an insurance company anymore. They're really pushing into healthcare and elderly care. It's like integrated finance, but focusing on keeping families healthy and happy.
Yeah, for sure. But 2023 wasn't exactly a walk in the park for them. I mean, they had to deal with some pretty big challenges, like those crazy weather events that ended up costing them 2.9 billion RMB in disaster insurance claims. It's a real stress test, right?
Absolutely. That's a massive payout. It really shows how important they are, as a stabilizer during times of crisis. But maybe we should start by looking at their different business segments, see how each one performed.
Yeah, good idea. So the report breaks it down into life and health insurance, property and casualty insurance, banking, asset management, and technology. So let's start with life and health. They had some pretty good growth there right now.
Yeah, their life and health segment, it did pretty well. New business value, or NBV as they call it, grew by 36.2% year on year. But what's really interesting is the NBV per agent, that number jumped by a whopping 89.5%.
Wow, almost double. That's a massive jump. What's driving that?
It seems like their focus on agent productivity is really paying off. They're giving their agents better tools and training, and they're using technology to, make the sales process smoother.
That's not just about having more agents. It's about making the ones they have work better.
Right, exactly. And it's not just about chasing new customers either. They're really putting a lot of effort into keeping their existing customers happy, satisfied.
And the report mentioned something called a community grid initiative. What's that all about?
Yeah, so it's basically about providing really good service to their existing customers. They're creating these like local networks that offer personalized support and help build stronger relationships with their clients.
And they're even adding healthcare services into the mix. They're promising this worry-free, time-saving, and money-saving experience. That's a pretty bold claim.
Yeah, it is, but it's part of their bigger plan to become more than just an insurance company, They want to be a real partner for their customers, addressing their needs, well, in a more complete way.
Okay, so life and health seems to be doing really well. What about property and casualty insurance? I know they had to deal with those huge payouts from the natural disasters.
Yeah, those natural disasters definitely had an impact. But even with those 2.9 billion RMB in claims, they still managed to, do pretty well overall. It shows they have the financial strength to handle those kinds of events.
So their customers can feel confident that they'll be there when they need them? That's got to be reassuring. What about banking? How did they do in 2023?
Banking delivered steady performance, which is pretty good considering how much the regulations are changing in China. It's a tough environment to navigate, but they seem to be managing it well.
All right, let's move on to asset management. The report talks about them entering a new stage of high-quality development. What does that even mean?
Basically, they're focusing on steady returns and making sure their investments support major national strategies. It's about finding that balance between, being financially responsible and helping China achieve its bigger economic goals.
So they're thinking long-term, looking at sustainability and the bigger picture. Makes sense. Now, for the part I've been really waiting for, technology, it feels like Ping An is really going all in on this.
They definitely are. They're actually #1 globally for both fintech and healthcare patent applications. That tells you how serious they are about innovation.
Wow, that's impressive. And they have a huge team, over 20,000 tech developers and 3,000 scientists working on things like AI, service representatives, and smart risk identification. That's a serious investment in people and research.
Yeah, and it really sets them apart. This focus on technology lets them create unique customer experiences, optimize how they work internally, and potentially even, disrupt whole industries.
Okay, we've covered a lot of ground with their different business segments. Now let's get to the real nitty-gritty, the financials. We need to break down those core statements: income statement, balance sheet, cash flows, and free cash flows.
Right, let's dive in. First off, operating profit attributable to shareholders, that dropped by 19.7% year on year.
That's a big drop. What were the main reasons for that?
Well, a few things contributed to it. The increased claims payouts in property and casualty insurance, because of those natural disasters, that played a part. And then they've been investing heavily in technology and expanding into new areas like healthcare and elderly care. Those investments, they cost money up front, and that can impact profitability in the short term.
So it's not necessarily a bad sign, more like a strategic decision to invest in future growth.
Exactly. And it's important to remember that they're still committed to creating value for their shareholders. They announced a final dividend of 1.50 low euro RMB per share for 2023.
That's pretty impressive, especially with the drop in operating profit. The report mentioned that this is their 12th year in a row with dividend increases.
Yeah, it's a strong signal to investors. It shows they're confident in the long-term health and profitability of their business, even when there are, short-term challenges.
Okay, let's dig a bit deeper into those core financial statements. What are some of the key numbers that stand out to you?
Well, if you look at their income statement, their life and health insurance segment generated an operating profit of 106,083 million RMB. That includes the release of what they call the contractual service margin, or CSM. It's a key part of how they recognize revenue under the new IFRS 17 accounting standards.
Ah, okay. So that's a new accounting rule that's affecting how they report their financials. Can you explain IFRS 17 for those of us who aren't accountants?
Sure. In simple terms, IFRS 17 means insurance companies have to recognize revenue from their contracts over the whole time they provide coverage, not just when they receive premiums. The CSM represents the profit they haven't earned yet from those contracts, and they'll recognize it gradually over time.
Got it. So it's a more accurate way of showing the long-term nature of their insurance contracts. What about their balance sheet? What's their financial position look like?
Their balance sheet shows total assets of 11,583,417 million RMB and total liabilities of 10,354,453 million RMB. That leaves them with a healthy amount of equity attributable to shareholders. They also have a strong solvency position, which is really important for an insurance company.
Right. Their solvency margin ratios are way above what regulators require. So they're in a good position to meet their obligations to policyholders. Now, what about their cash flow statement? How are they generating and using their cash?
Well, their core operations are generating positive cash flow, which is a good sign. And as we discussed, they're investing heavily in their business.
And what about their free cash flow? That's the cash they have left over after paying for things like capital expenditures, right?
Yeah, and it's a good indicator of their ability to generate value and maybe return more cash to shareholders. We'll want to look at this carefully to get a sense of their future prospects.
Okay, lots to think about there. Now, the report mentioned something about their investment strategy. It sounded like they're being very careful about managing risk in such a volatile market.
Oh, absolutely. They're lengthening asset durations to lock in long-term returns, especially with low-risk bonds. And they're being very strategic about their investments in, things like debt schemes and equity wealth management products.
Can you tell us a bit more about those?
Sure. Debt schemes and debt wealth management products, those make up a big part of their portfolio, about 416,810 million RMB. These products are usually invested in a mix of fixed income securities with the goal of providing stable returns. And then their equity wealth management products, those are mainly invested in the shares of high quality companies, and those totaled 68,399 million RMB.
So it sounds like they're spreading their investments across different types of assets to manage risk and try to get consistent returns.
Exactly. They're being very strategic with their capital. One interesting thing you mentioned earlier was their commitment to creating value for their shareholders. That's a big theme throughout the report.
It is. They seem serious about sharing their success with investors, and their dividend track record is very impressive.
And it's not just about dividends. They're also using share buybacks to give back to shareholders.
The report mentioned they canceled 6,803 A shares they bought back under their 2019 A share repurchase plan. What's the thinking behind buybacks?
Well, when a company thinks its shares are undervalued, buying back those shares can be a good way to increase shareholder value. It reduces the number of shares out there, which can boost earnings per share and maybe even push the stock price up.
So it's a way of showing confidence in their own future and backing it up with action.
Exactly. They're putting their own capital to work to benefit their shareholders.
Okay, so we talked about dividends and buybacks, but what about their long-term growth strategy beyond those? How do they plan to keep things moving forward?
That's a great question, and it's something we'll explore more in the next part. One key aspect is their focus on integrated finance, but we'll unpack that more in part 2.
Sounds good. Looking forward to it.
So, picking up where we left off, let's dig a little deeper into Ping An's long-term growth strategy. You mentioned integrated finance earlier. What exactly does that involve?
Well, it's this really ambitious plan they have. It's about combining financial services with healthcare and elderly care. They're trying to build this whole ecosystem that addresses, the changing needs of their customers. But the report also pointed out some challenges with this strategy.
Yeah, one of the biggest hurdles is just managing how complex it is to work across so many different industries. It's not just about offering different products separately. It's about weaving them together seamlessly to create this, truly integrated experience for the customer.
Right, and the report talked about setting up effective firewalls between their different business segments.
Yeah.
I imagine that's really important to avoid conflicts of interest and protect customer privacy.
Absolutely. They need to make sure that customer data from, let's say, their insurance business isn't being shared inappropriately with their healthcare operations. They have strict policies in place to address this and make sure they comply with data privacy rules.
The report also mentioned the risk to their reputation. If any part of this integrated ecosystem doesn't live up to expectations, it could hurt the reputation of the whole Ping An brand.
Oh, for sure. They're definitely aware of that. That's why they're investing so much in quality control, training their employees, and having really strong customer service. They're also being very transparent about how they operate and working closely with regulators to make sure they meet all the compliance requirements.
It seems like they're really taking a proactive approach to manage these risks. Another challenge the report mentioned was attracting and keeping top talent in both finance and healthcare.
Yeah, that's a critical point. They're competing with a lot of companies for skilled professionals, and they need the right people to pull off this ambitious plan. They're putting a lot of resources into employee development programs and offering competitive salaries to try to build a really strong and capable workforce.
And of course, technology is crucial in all of this. They need to connect their different systems and platforms smoothly so they can provide that seamless, unified experience for customers.
Absolutely. They're putting a ton of resources into things like cloud computing, artificial intelligence, and data analytics. It's all about building the technology foundation for their ecosystem.
It sounds like they have a lot of challenges ahead of them with this integrated finance model, but they also seem incredibly determined to make it work.
They are. And remember, this is a long-term plan. They don't expect to achieve all their goals right away. They're taking it step by step, carefully building out their ecosystem and expanding over time.
Okay, that makes sense. Now, I want to go back to shareholder value for a minute. We talked about dividends and share buybacks, but are there other ways this integrated finance strategy is meant to drive growth and profits?
Definitely. By expanding into healthcare and elderly care, they're entering huge new markets with tons of growth potential.
And they're smart about using these new offerings to attract and keep customers in their core financial businesses, right? Like offering healthcare benefits to insurance policyholders or giving high-end health checkups to their wealth management customers.
Exactly. It's all about building this sticky ecosystem where customers like having all their needs met in one place so they stick around. It also helps them maximize the lifetime value of each customer, which is key for long-term profits.
They're also very focused on operating efficiently, right? Using technology to streamline things and reduce costs across all their businesses.
Yes, they're always looking for ways to optimize their operations and work more productively. The report highlights how they're working to simplify their organizational structure, empower employees, and foster a culture of innovation and continuous improvement.
Sounds like they're not overlooking anything in their pursuit of efficiency.
hmm
And of course, they're also very focused on managing risk to ensure the long-term stability of the business.
Of course. Their risk management framework covers everything: insurance risk, market risk, operational risk, and cybersecurity. They're constantly adapting their strategies to address new threats and challenges.
Okay, so we've covered a lot on their integrated finance strategy. Now let's step back and think about their overall business outlook. What are some of the opportunities and challenges on the horizon?
Well, on the positive side, they're operating in a big market that's still growing. China's economy is expanding, and the demand for financial services, healthcare, and elderly care is only going to increase in the coming years.
Right, and they already have a strong brand reputation and a loyal customer base. They're known for trust and reliability.
Exactly. And all their investments in technology and innovation are giving them a big advantage over a lot of their competitors. They're really leading the way in the digital transformation happening in the financial services industry.
So they're in a pretty good position. But what about the challenges? The report mentioned that competition is getting tougher.
Yeah, competition is definitely heating up. They're facing pressure from companies both in China and internationally who want a piece of this growing market.
And the regulatory environment in China is always changing, right? They need to be flexible to stay compliant and avoid penalties.
Absolutely. Regulatory changes can really impact their business, so they need to be proactive in adapting.
And then there are always those unpredictable events economic downturns, global instability, things like that.
True, those external factors are always a wild card. But even with these challenges, Ping An seems to be in a good spot for the future. They have a clear strategy, a strong track record, and a real commitment to innovation and adaptability.
They seem willing to take risks and push the boundaries, like with their move into healthcare, elderly care. That kind of entrepreneurial spirit can be a real advantage in a fast-changing world.
I agree. It will be fascinating to see how they continue to evolve and adapt in the years to come as they build out their integrated finance ecosystem and navigate the complexities of the global market.
Okay, so we've talked a lot about their financials, their growth strategy, and the challenges they face. But there's another important thing we should discuss, their commitment to sustainability.
You're right. That's a key part of their story, and it's something they emphasize throughout the report. They have a whole section dedicated to environmental, social, and governance factors, or ESG.
Hmm.
It's clear that they're serious about sustainability. They're making it a core part of their business.
So what does that look like in practice? What are some specific examples of their ESG initiatives?
Well, for environmental sustainability, they're really promoting green finance. They've made substantial investments in green loans and green insurance, and that fits perfectly with China's national goals for carbon emissions.
It's interesting how they're combining their financial expertise with these broader goals for society. It's not just about making money, it's about having a positive impact on the world.
Exactly. And they're not just focused on the environment, they're also very involved in social programs like their Village Doctor program, which provides healthcare services to rural areas.
Right, the report talked about how they're providing mobile health checkups, medical consultations, and even first aid training to these communities that don't have easy access to healthcare.
It's all about reducing healthcare disparities and making sure that everyone has access to quality care no matter where they live.
And that connects back to their integrated finance approach, doesn't it? They're not just providing health care, they're also potentially creating opportunities for these rural communities to become more financially included.
It's a great example of how they see the connections between these different issues, health, finance, and social well-being. They're taking a holistic approach to create value for everyone involved.
So we've talked about environmental and social initiatives, but what about governance? How are they demonstrating their commitment to ethical and responsible business practices?
Well, they have a very active board of directors that is very involved in overseeing risk management, sustainability efforts, and shareholder interests. They're also very focused on protecting consumers and making sure they're treated fairly, their data is kept private, and the business operates ethically.
That focus on ethics is particularly important as they move into these new areas like healthcare and elderly care, where trust is absolutely essential.
Definitely. They seem to understand that building and maintaining trust is crucial for long-term success.
It's really impressive how they're incorporating ESG principles into everything they do. It's clear they're committed to building a business that's not just profitable, but also responsible and sustainable.
And it's not just about doing the right thing, it's good for business too. Customers are looking for companies that share their values, and investors are paying more attention to ESG performance.
It seems like Ping An gets it. Sustainability isn't just a bonus anymore. It's essential for any company that wants to do well in the long run.
Absolutely. It'll be interesting to see how their ESG strategy continues to develop in the coming years, especially as they face new challenges and opportunities in this rapidly changing world.
Okay, we've covered a lot of ground in this deep dive. We've explored their business segments, their financials, their ambitious growth strategy, and their commitment to sustainability. They're clearly a company that's on the move, constantly evolving and pushing boundaries. What stands out to you as the biggest takeaway from what we've discussed so far?
I think what's most striking is just how bold their vision for the future is. They're not just reacting to change, they're actively shaping it. Their move into healthcare and elderly care, the huge investments they're making in technology, their focus on sustainability, it all suggests that they're thinking long-term and willing to disrupt the status quo.
I agree. They're not afraid to challenge conventional wisdom and explore new possibilities. They're seeing how the lines between traditional industries are blurring, and they're creating a new model for the future of financial services, one that includes health, well-being, and social impact.
But they're also realistic about the challenges. They know the risks, they're taking steps to reduce them, and they're constantly adapting their strategies to deal with the complexities of this ever-changing market.
It's a really interesting story and one that we'll definitely be keeping an eye on. Their success or failure will have consequences not just for the financial services industry, but for the wider economy and society.
Absolutely. Now, before we finish this part of our deep dive, here's a question to think about. Can Ping and actually achieve this ambitious vision of integrated finance? Can they seamlessly connect the worlds of finance, healthcare, and elderly care? Can they overcome the regulatory hurdles, manage the inherent risks, and deliver on their promises to both customers and shareholders?
Yeah, that's a tough question. Can they really pull it off? I mean, it's a bold move, and there's potential for huge success, but also, some pretty big risks too.
Yeah, definitely. It'll be really interesting to see how it plays out. But one thing's for sure, they're not just sitting around waiting. They're actively trying to shape the future.
And that proactive approach, it seems like that's reflected in their commitment to sustainability, something we talked about before. It's not just a side project for them, it's really baked into their whole business strategy.
Right. They see those ESG factors, environmental, social, and governance, as crucial for their long-term success. It aligns with their bigger goal of, serving the real economy and making a positive impact on society.
So let's get into those ESG initiatives a bit more. What are some concrete examples of how they're actually putting these principles into practice?
Well, in terms of the environment, they're really pushing green finance. They've invested a lot in green loans and green insurance, and that lines up perfectly with China's goals to reduce carbon emissions.
It's impressive how they're using their financial expertise to support these bigger societal goals. It shows they're thinking beyond just profits and considering the well-being of the planet in the long run.
Exactly. And it's not just about the environment. They're also really involved in social initiatives, like that Village Doctor program, providing healthcare to rural areas.
Yeah, that's right. The report talked about them bringing mobile health checkups, medical consultations, and even first aid training to these underserved communities. It's all about making healthcare more equitable, ensuring access to quality care regardless of where people live.
And it all ties back into their integrated finance approach. They're not just providing healthcare as a standalone thing, they're also potentially creating ways for these rural communities to participate more in the financial system.
It's a really interesting connection. They're seeing how these issues, health, finance, social well-being, are all intertwined. It's a holistic approach to creating value for everyone involved.
Now, moving beyond environmental and social initiatives, there's also the governance aspect. They're committed to good corporate governance, which is essential for trust and transparency. Their board of directors is very active in overseeing risk management, sustainability initiatives, and shareholder interests.
And the report highlighted their strong emphasis on consumer protection, putting in place measures to ensure fair treatment, data privacy, and ethical business practices.
Right, that focus on ethics is really important, especially as they expand into areas like healthcare and elderly care, where trust is absolutely critical.
It's clear that Ping An is really walking the walk when it comes to ESG. They're weaving these principles into everything they do, which is commendable.
And it's not just about doing what's right, it's good business sense, too. More and more, consumers are looking for companies that share their values, and investors are paying more attention to how companies perform on ESG issues.
Ping An seems to get that sustainability isn't just a nice bonus anymore. It's a must-have for any company that wants to succeed in the long run.
Exactly. It'll be really interesting to see how their ESG strategy evolves in the coming years, especially as they face new challenges and opportunities in this rapidly changing world.
Well, I think we've covered a ton of information in this deep dive into Ping An's 2023 annual report. We look at their main business areas, their financial performance, their ambitious integrated finance strategy, and their commitment to sustainability. It's clear they're a company that's always moving, innovating, adapting, and pushing the boundaries.
It's a really fascinating story, and I'm sure there are more exciting and unexpected developments to come. What stands out to you as the most significant takeaway from all this?
For me, it's their boldness. They're not just reacting to changes happening around them. They're actively trying to shape the future. Their move into healthcare and elderly care, their huge investments in technology, their focus on sustainability, it all shows a company that's thinking big and embracing a long-term vision.
I agree. And what's even more impressive is that they're doing all of this while staying grounded in a strong sense of responsibility to their customers, their employees, their shareholders, and society as a whole.
They're definitely a company to watch. For our listeners who want to dig deeper, I highly recommend checking out their full 2023 annual report. It's full of insights into one of the most innovative and dynamic financial services companies in the world.
And as always, we encourage you to think for yourselves and come to your own conclusions. This deep dive is just a starting point, right?
Exactly. There's always more to explore, more to learn, and more to discuss.
So keep those questions coming, and we'll see you on our next deep dive.